Hi, everybody. Thank you so much again for taking the time to join us today. I know that it's Thursday before a long weekend. There's a lot of moving parts usually just to button up before everybody goes off. I'm really excited to be representing Strive across Western Canada and joining you as your regional director. Strive hasn't launched with the team yet, so I'll put a big caveat on there. All signed up, basically ready to go. However, we are waiting for some additional staff to join us. So today we are a brand new lender. We've been operational for approximately 8 months. We're centralized out of Ontario. I'm the only one out west currently, but we're looking to expand the team. So we are brand spanking new, like 9 weeks in Western Canada. We're very select in who we work with. We basically have 14 offices signed up across Western Canada, and hopefully adding you as the 15th here coming soon. So we are a 100% insured and insurable lender, dealing with all 3 insurers across the country. We're licensed in all provinces except for Manitoba and Quebec. Manitoba, we're just in a holding pattern waiting for that to come through. Quebec probably won't be until 2023, maybe even 2024. I think they're just a little bit, unfortunately, a little bit lower down the list as we get the rest of the provinces up and firing. We kind of came from the ashes of Street Capital, I would say. So Street Capital got bought out by RFA. Bless their hearts. Unfortunately, they basically disbanded the entire executive suite at Street Capital. There was a dream and a hope, and in 2018, it took us until 2022 or 2021 before Strive was born. So by no means are we trying to be the next Street Capital or even an MCAP or a First National. I think we'll always be a smaller boutique lender that chooses very carefully who we work with across Canada. As a goal to ensure that we're having quick turnaround time and just a little bit more of a boutique feel. We'll look very different as a lender today than we will probably by the end of the year. So as I mentioned, we're 100% insured and insurable product only of all 3 insurers across Canada. We plan to have an alternative mortgage offering as well as a true conventional offering. I don't know the timing on that, but it definitely is on the near horizon. What makes us different, I suppose, is at any start of a new lender, obviously we know that monoline lenders can have their challenges. So I think we made sure that we are concentrating on avoiding those challenges. So obviously communication I know is really important to brokers. They want to know where their deal's at. They want transparency and they want consistency. You have a designated underwriter, or you will have a designated underwriter once you guys are going, who handle documentation from front to back. So you know who you're working with. Currently, everything is via email. However, we are working on a portal to launch as well. Just keep in mind, we're 9 weeks operational in Western Canada. So you are catching us at a very early stage, but we will have a portal for mortgage brokers to go on, see the status of their files, drag and drop documents, hopefully have communication with their underwriter. So communication obviously is a pain point. Other pain point a lot of the time is audit. So I'm sure everybody's experienced pre-funding audit experience before with various lenders. Where I say we're different in that, to say that there's no such thing as audit is ridiculous. Everybody knows there's quality assurance that happens at every stage of the file. Where I think we're different is most lenders run it in silos. So what happens is your deal comes in, that gets approved, the underwriter underwrites it, they get all the documentation, and then they sign off on the file. Then prior to funding, depending on the attributes of your file, quite often you'll get, hey, Sue, one more thing, we missed getting this, we missed getting that. Do you mind sending us this? Or we saw this on the file, we totally missed it. Can you identify the issue and mitigate it? For us, we run it in tandem. So what happens is when a commitment comes out, the documentation is reviewed. When you get a broker complete from us, it's because audit has already reviewed it. So it happens simultaneously throughout the file. Where it helps us be efficient is obviously the least amount of back and forth, the better. Like I like to say, if you can one and done a file, absolutely amazing. We know that's hard to do in a lot of cases, but if you can try to remain it within 3 touch points, I think you're going to see efficiency from us. You'll be very impressed. So I think we're aligning ourselves with brokers, seasoned brokers who are able to package that deal up properly to ensure that, when you hear from your underwriter, it's almost never a good thing. right? Because the underwriter, you want to talk to them, you want to have a good relationship, but the only time they call you usually is because they need something. So if we can mitigate that and have it done in less than three touch points, I think that's where our goal's at, and that's where our efficiencies are. Not to say that, I mean, obviously if we get to the finish line and we realize the client has lost their job, obviously that's going to warrant a phone call to figure out how we can move this file forward. But we're not into killing a deal last minute. So again, simultaneous audit review makes life a little easier. Appraisals, obviously a pain point when it comes to conventional files, organizing access, especially when you're going in subject-free. Subjects, what are those? So it's because we deal with all three insurers, they have an automatic valuation tool that they apply to the file. So quite often, if at all, well, you'll never require an appraisal. Obviously, very few times, they might come back and say, we don't agree with value. Maybe the client has gone over asking, but generally speaking, passes through AVM, no more appraisal required. If an appraisal is required, we don't have a designated list of appraisers. You choose who you want to work with. We don't force you to go through NES or Solidified or RPS or anything of that. So if you have a relationship, you know that's going to be fast, by all means, order the appraisal through them, as well as market rents. So I'll get into a little bit of our product lineup. It is relatively generic, obviously, because it's insured and insurable products only, but I like to think that we have some flexibilities where other lenders are not necessarily exercising. So I'll start with purchase plus improvements. We can do up to $100,000 worth of improvements and then divide that up into 3 draws, which is fantastic. So obviously quotes up front, the process is very familiar to you and it doesn't really differ from others other than we're flexible on how we do those draws. So if you want to move from room to room, you're doing kitchen, bathroom, basement, you want to move from room to room, and that's how you're dividing up the draws, great. There's not actually a template we follow. You tell us what the client is looking for, and we do our best to work with you to be able to divide those up. So quotes up front, obviously, as if a significant amount of work to be done, obviously we want an inspection to confirm the work has been done as per quotes. If you're going into some of the smaller amounts and more cosmetic type, and clients doing a lot of work on their own, sometimes receipts will also work. So you tell us what you're looking for and we do our best to accommodate, but we'll tell you up front. It won't be a surprise to say, hey, we asked for receipts and now we're asking for an inspection. All of those things and all those arrangements remain up front. So obviously how it works.
I have such a weird question because I think I have a brain fart on this. So when it comes to like a purchase plus improvements, let's say the person is doing a kitchen reno, but they've also put in brand new appliances. Can you cover appliances with the purchase plus improvements?
Not usually, because anything that's removable from the property doesn't really add value because you could take it out. So appliances are a no, but anything like, I don't know, faucets, like some of those type of things obviously can be included, but not appliances.
What about like a microwave that's like over the range? It's like built in.
I don't know. I mean, we send those things. The reason why we ask for quotes up front is because we send those quotes to the insurer and the insurer goes, yes, this adds value to the home. There may be some things that they won't consider. And then they'll say, yeah, we'll consider it, the value of this. This is the work that we agree adds value to the home. And they might omit some of the other appliances and such.
Gotcha. So, it's one of those things that kind of came up recently. And I was like, I don't know if we can include appliances, but thank you for that.
Yeah, no problem. Very typical. Obviously, we hold the account or hold the amount in trust, and client has access to that as draws or as work is being completed and inspections confirm the work has been done. We'll even consider some structural work. When I say structural, I'm not talking you're buying a house, they do an inspection, and there's a crack in the basement and you need to fix it. Doesn't really add value to the house when the house should be at that value without that crack foundation. So that's totally different. But if it's something as, hey, we want to open up this room, we want open concept living, great, get an engineer's report and some permitting, and we could possibly do that as a purchase plus improvement. So lots of flexibility there. I'm obviously okay to take that offline if you have one off or if you have questions about specifics, by all means, but that's where we're definitely different, 100K up to 3 draws. We're very aggressive on non-subject rentals. So because again, we're insured, there's flexibility there that exists on some things, but not others. So obviously hard and fast under $1 million, 25-year amortization max, no extended ratios. Those are absolutely hard and fast rules. When it comes to non-subject rentals, and we don't do finance rentals at this point either, unless they're either a duplex or a triplex. So keep that in mind. If it's an up-down, has to be legal because the insurer is going to ask for confirmation that it's a legal duplex. So if you're buying a house with a legal basement suite, for example, and it's fully self-contained, that could count towards a duplex. Again, has to be fully legal, permitted, and proper. For non-subject, we use a rental worksheet, which ends up being about an 80% rental offset. So very aggressive. We use that on 1 up to 6 properties. So client can own a total of 8. They can have 6. They can have 6 rental properties and owner occupied in a secondary home. We are light on the paperwork, I would say, in order to confirm. So we don't ask for T1 generals. We ask for basically market rents. So if it's a new rental, it's an owner occupied being switched into a rental, market rents, or lease agreements. We don't ask for T1 generals. So obviously you fill out that rental worksheet, surplus goes into other income, deficit goes into liabilities, and away we go. So very, very aggressive on that. On a subject property with a rental component, 100% add to income. If the beacon score is over 680, if it's under 680, 50% add to income. Flexibility on income, I think, is where we actually are thriving. I'll give you a case study of a file that we did a couple of weeks ago, and Pete, I think, has already heard this story. But clients coming in last minute to a broker. It was a family member that decided they were going to go and get a mortgage on their own. They went to a bank. Bank couldn't turn it around quick enough, but they were also having problems with the income. So usually any type of variable income, you're looking at a 2-year average, but we understand COVID happened. There's, layoffs. There's, if you're a business owner, depending on where you were, what kind of business you own, obviously some of that income had suffered. So if it means we can use a 3-year average and it makes sense and they're on pace to meet or exceed that, then we are doing 3-year averages. If it means that we need to look at a file where 2020, 2021, 2020, or 2019 is great, 2020 wasn't so great, 2021 is great, but we need to throw out that 2020 altogether because maybe they've got a raise and now they're a journeyman electrician and they're definitely going to be in a better position than they were in previous years, then we'll look at that. So we tend to lean on a 3-year average. If it's anything but a 3-year average, it's an exception with the insurer and it's also an exception with us. But if you can help us make sense of it, we'll present it to the insurer, of course. We also have in BC access to a program with one of the insurers is a low doc or basically brand new to business, the Predictive Income program. So if somebody has been in business for self for less than 6 months, business for self for more than 6 months, but less than 2 years, and you can provide bank statements, we look at annualizing those bank statements for income moving forward, and it's called a predictive income. They are looking to use that program for specifically professionals. So if this, for example, it's a physiotherapist who has been working in a clinic for several years, they've decided to either go on contract with that clinic or they've decided to open up their own. We can look at bank statements to annualize that out. Any questions? I could just keep going. My Strive Mortgage, so clients have a portal post-funding that they can go on and have access to change their prepayment privileges, which are 1515. They can change their property taxes. We don't mandate the collection of property taxes, so it's up to them if they want to change from no to yes. So all that fun stuff. We have bridge financing, prime +5 and a 350 fee. We do assignments on new construction at new value. So again, assignments only on new construction, and we'll consider new value. That in that case, we'll probably need an appraisal. Yeah, I mean, there's lots of flexibilities, and I welcome you to run a file by us in order to submit. We're not live again at the moment for your team, but we will be probably mid-May. If not sooner than that. So I have 3 underwriters starting. One started this week. I have another one who is very seasoned that starts in next week. And I have a BC specific underwriter starting here at the end of the month. Does anybody have any questions? I could just ramble on about little bits and pieces here and there. I feel like because we're so new, we're taking and we're being a lot of flexible with even the type of property. So I'm looking at one now, which is a modular home in Enderby on 5 acres. I do modular homes as long as it's on a concrete or concrete foundation and it's on its own land. We won't do, obviously, mobile homes we avoid. And we're seeing a lot of misrepresentation of modular homes as, mobile homes as modular homes. So we're quite skeptical when we see them, but obviously it has the appropriate sticker and everything else, then we're okay to proceed. We'll consider ALR property as long as it's not being used for farming and it's being used as a residential.
Hey Tiff, sorry I'm late.
Oh, hey, how are you?
I was getting ready for my trip.
So. I know your eyelashes look lovely.
Oh, that wasn't that. I'm not going to say it because there's boys on this call.
Okay.
You're welcome, Brent. You're welcome. You can giggle. Look at him.
There's a breeze. There's a breeze, Deb.
You know, my children would be like, "Oh, Mom."
They are. I can see Sue's face.
Log home, small acreage, yes.
Yeah, we will consider. Will we do every single one? No. I mean, when we look at odd properties, like when most lenders won't do them, you have to remember that we look at the whole story. So it's a log home with 10% down. Clients can have really good, fallback position. They've got good beacons, good credit, good job stability. Absolutely. If it's a 5% down on exceptions on income and questionable credit and not a lot of fallback, probably not. The maintenance with a log home obviously is a little bit more expensive than owning an average home, depending on the age. So we want to make sure the clients are in a good position that they can obviously upkeep that property to keep value.
So when it's a log home, do you look for it to be a certain age so the logs are done twisting, or do you?
I don't think so. I mean, we haven't, now keep in mind, I mean, we've been letting in Western Canada for 9 weeks. So have we seen a lot of log homes? No.
So I know, like the last time we were on the call, you said that you don't have a limit on acreage. So I think the last time we chatted, you said that you would lend, like if it's 50 acres, you don't have a problem with that, but it's a house in 15.
Correct.
But you also don't want those 15 acres to have Betsy Roth walking across the property, right?
I'm literally looking at an MLS listing of a modular home in Enderby on like 3 or 5 acres. But then when I go to do, like, the listing looks good, but then when I go do a search, they've got livestock on the property.
Yeah. So that's a no.
That's a no.
Okay.
No. Yeah. I love cows. They taste amazing. We can't have them on property.
All right. Then.
Sorry for the vegans. Yeah, so it has to be used as residential. Like, you're okay to be ALR. So like Deb says, if it's like a 40-acre parcel nestled amongst 40 other 40-acre parcels, it's normal for the area, but it's not used for farming or anything like that. I mean, we're okay to do house plus 15.
Okay, I think Sue had a question.
Sure.
I did, and then I answered my own question in my head.
In your head all by yourself?
We were talking about modular homes, and I was like, what about putting a modular home on a piece of land? But then I realized that you can't insure that because that's not, they would already own the land. Never mind.
It's apparently, that's a little bit more complicated, and I don't understand all the steps to this, but apparently it is doable where if you own the land and you're looking to do it as a purchase for a modular to be placed on the land. It's just, you have to have permanent foundation. You can't have it on wood piles. So we had one recently, I think it was in Saskatchewan, that they were trying to do that, but it was really interesting, where mom owned the property. We're trying to gift equity to the kids to purchase it. And then they were going to put a modular home on it, but they couldn't transfer title until they knew we would finance the modular, which it's like chicken and egg kind of thing. So mom's going to have to basically do a purchase as a modular home and make arrangements that way. And then we'll have to do a title transfer and such afterwards. But yeah, doable, a little bit more complicated, but doable.
Tiffany, question from one of our brokers was, do you have anything in print yet for Strive as a kind of a broker kit kind of thing?
So I sent off I'll send a follow-up, which is going to be
I've got it, don't I?
Yes.
I've got stuff, don't I? Yeah.
Yeah, if you wanted to forward that to the rest of the team, you're more than welcome to, because it's all the product sheets that we currently have. So it talks about new to Canada, our general guidelines, things like that. Has our rental worksheet. There is a link there that will give you access to all of our forms. So Deb, do you want to forward that, or do you want me to send it after the meeting?
I got it.
Perfect.
I got it. And then the other thing is, do the brokers have to sign with you directly, or they can just put me
No.
a submission agent and we're good to go? Okay.
Yeah. So what I was mentioning before you were on is we are waiting for staff to start. So we are limited currently, like today, for example, a Thursday before a long weekend. It's been fun. 2 people called in sick and I've got 1 person on holidays. So that's 3 out of 6 staff that are currently away. So today's been fun, but hopefully we can have more
So
staff.
did you need one of us to jump in and approve all your deals and underwrite for you?
Yeah, exactly. Deb, you could do that.
Oh, all day long.
Yeah. I mean, it's the growing
If I
pains,
don't like the broker, declined.
right? You don't even have to, sorry. And then we'll just say call Deb. Yes. I think are we perfect? Absolutely not. I will never pretend that we are going to be the be all catch all for you. I do think there's some great opportunities to work together. I do think there's great opportunities as a new office to us, but obviously an established one to give us feedback on how we can be better. I think we are winning a lot of deals right now, specifically on our flexibility. I know the insurers are working very well with us, especially Canada Guarantee and Sagen. They've been very good at providing us flexibility where most lenders, like I've looked at so many monoline turn downs that we would do in a heartbeat. It's barely an exception or a sniff, but everybody else is too, that doesn't meet their policies out of the gate. So I'm happy to review all of these one-off deals with hopes that obviously we can make some magic together moving forward. So once I am prepared to provide you the service where I think you deserve, we will onboard you. So my guess is probably mid-May before we get going. I haven't met the underwriter that's coming on board. All of our underwriters currently are fantastic. They're very well seasoned. We're just careful on how many mortgage offices we onboard to make sure that they can keep up with SLA. Typically, we're 24 to 48 hours on deals and docs. Currently, because of today, we're a little bit behind on that, but I think you'll get clear communication from us as to where we stand so you can make that decision on how we can earn that business from you. And transparency is key in communication, obviously. I'm not promising you the world, but I am promising to be here to hold your hand and making sure that we earn your business.
Tiffany, given that you're a new lender, what kind of what is going to give us confidence that we know that our clients are going to be able to be served for a long period of time moving forward? So
I can't tell you who our investors are because that's kind of against policy, but I think
just really quietly, I won't tell anyone.
Yeah, this isn't being recorded.
Yeah, don't mind that red button. That little red light is nothing. Just
right. That. Our investors are obviously looking to diversify. They're investors that are very familiar to us and our background. They're not going anywhere, and we actually have a lot of liquidity. It's us actually getting up and running fast enough to get the liquidity out. We're 100% obviously insured, so the clients have nothing to worry about. Obviously, CMHC is 100% government guaranteed, where the privates are 90%. I always say worst case scenario with a monoline lender going out of business, we lose your mortgage and you're debt free. But that never happens. If for whatever reason we end up being so amazing, we either got bought out or we flop, which won't happen based on our pedigree, then our mortgage book is sold and it carries on. So I don't think that, I know that by my 20 years experience, that we're going to be a successful lender. We're never going to be a huge lender. We're not getting above, in front of our skis, which is why I'm selective who we're working with and when, to ensure that we have longevity.
We can't talk about skis. Ski season is over.
I know, it's true.
You make me jealous.
Water skis. Skis. You don't want to get out of the water skis either. That hurts.
Oh yeah, I'm sure more. I was going to ask a follow-up to that, which is, yes, you guys administer all your own underwriting. There's no underwriting center. It's not like Paradigm or anything.
So we operate all of our own underwriting, all of our own audit. The only thing that we have a partner in is funding. So now it may be different moving forward, but obviously every small lender, when they start, have to use a funding facility, just mainly on cash flow. It's very expensive to operate your own funding department. Not to say that we won't do it, it's just currently we're not. Where I think we're different than other monoline lenders or some of the experiences you may have had, FCT is our funding facility. What's different is they have full autonomy to be able to release funds and not have to go back and forth with the lender. So quite often at funding, you sometimes get an issue where, you know, they're not releasing funds because the identification verification form, which is usually the common hangup, is different on occupation, what we have on the deal, to what the client has filled out in the lawyer's office. So anytime there's different verbiage, they have to go, FCT, supposed to go to the lender to make a decision on how they want to move forward. Is it a fraud issue? Is it something that's, you know, taxi driver to chauffeur? You know what I mean? Like, is it a difference enough that we care? That process is all with FCT for us. We've said, you have enough working, we understand how you work, you have full autonomy to make that decision. So there's not slowdown. On average, the funds are in the trust account by 9 a.m. day of funding. So FCT has been a very good partner for us. But that's the only partner that we work with on outside of the whole process. We do all of our own underwriting. We do all of our own audit. It's just the funding with FCT.
Tiffany, I don't know if this was asked already, but how do you deal with RIF income or anything like that?
Say that again?
RIF income? Or
what is that?
Like investment income, interest income?
Yeah, I guess it depends on the scenario, but we need to, just like any variable income, we need 2-year average. If it's RIF income, we need to know sustainability.
Mm-hmm.
That's what she's saying, it's RIF.
Mm-hmm.
Okay. So we need sustainability, that they're going to be able to sustain it for the life of the mortgage. So yes, we can use it.
So you'd want to see the statements to see that they had more than $20,000.
Yeah, exactly. I don't think we're uncommon in that. Yeah, does anybody have any other questions? I think we're pretty generic, but I think we're definitely going to do the right things during your business. We are not asking for a volume commitment right off the bat. I would say that's our job, to be able to earn your trust and earn your business moving forward. We obviously are catering to a lot more smaller towns. We don't have any restrictions where we lend. So we'll lend in Enderby and Shuswap and all those fun things, where a lot of lenders won't. If it's more than 15 minutes from a Tim Hortons, it's too small of a town for us. We're not worried about small towns.
So you're fine with like Dawson Creek, Fort St. John, Prince George, that area there? You're fine?
Absolutely. Yep.
Okay, good.
We're okay with like, what's that?
Sorry, I was just going to ask about rates and rate updates.
So rate updates, everything comes from me. So I'd be your point of contact for rates and all communication. How you're communicating with your underwriter currently would all be via email. So what we ask you to do is I ask to be involved on the file, just so I can hand hold it to make sure that you're getting all the service that you deserve. But everything's done via email currently. There is a broker portal that will help in that, but it's in its infancy and it hasn't been launched yet. So we hope by the end of May, you'll have even further transparency of seeing where your file is at any given time. Rate sheets, or we get best rates. We don't have, obviously you have your loan to value buckets where your rates will vary. So like up to 95% currently with us. We haven't changed prime yet. But our up to 95 is 3.84 and prime minus 95. We have best rates on 100%. So we don't differentiate between a stated income or any type of product offering. It's all the same rates. The only time there is a premium on rate, it's a pre-approval, and it's a 20 basis point rate premium. Commission paid is 115 basis points on your 5-year products. You're able to buy those down at any time. There's no limit. What else can I tell you? Did you have any other questions, Chris?
Do we get a present for the first deal that we send in?
Sure. What do you want? All right, that's a loaded question. I'll take that back. What kind of present are we talking about, Deb?
I don't know. Maybe like a special gift card or something, like incentive to get us to use you. Come on now. I'm always looking out for my brokers. Come on.
Of course. I hope that we can get together in the Okanagan and meet in person, and absolutely, I'll treat you right. I've been around long enough that I'm definitely gonna make sure you guys are taken care of.
I figure if you don't ask, you don't get.
Good rule of thumb.
Looks like there are no other questions. I don't see anything in the chat. So If anyone wants to get a hold of you, should we wait until we're all set up, or should we give out your details?
No, I think Deb's going to forward that information
Yep.
to everybody. They're more than welcome to peruse through that. If they have questions, by all means, I'll get together a couple of case studies for you before launch, so you can kind of get a feel of what we are and what we're about. But I would say income flexibility, non-subject rentals, very aggressive, purchase plus improvements, very aggressive, and turnaround time. And I know everybody says turnaround time, but I mean, we're boutique. We're only dealing with 15 offices in Western Canada. So we want to make sure that you're taken care of.
I sent everything to Peter, and Peter can send it out to everyone.
Perfect.
Will do. Tiffany, thank you so much for your time, and thanks for presenting us with a whole whack of information. It's so nice to know that we're one of kind of an exclusive group that will have access to this. So yeah, hurry up and get the thing set up.
Yeah, exactly. Yeah, hurry up and people start. I don't want to throw you into a mix where I know that I can't turn around service. So we're waiting for a couple of people, and I want to get to know them a little bit more and feel confident, and then you guys will be off to the races. I think you'll be impressed. I actually know that you'll be impressed. When I first joined, the amount of deals that I could see that were flying back and forth, where I was like, we actually do that? Like, really? That's what we did? And we had a turnaround time on a deal. Broker called me at 5 p.m. She didn't even have the deal application yet. It was the same deal that I'm talking about, the case study I'll send you guys. It was a nephew that decided to go, or a cousin or something decided to go off on their own to a bank that didn't come to fruition. 5 o'clock, I talked to her. 7 o'clock, I had the deal in with the majority of the documentation. It was underwritten, committed, docs reviewed in less than an hour. She had that signed commitment back to us in 30 minutes post that. And by 9 a.m., because people are in Toronto, by 9 a.m. getting to the office, the full deal was fully signed off. So in less than a day, deal was done. So I think we've been able to learn a lot of business just on, like, I don't want to take your emergency deals and only your emergency deals, but obviously we're going to do what it takes to be able to earn your business. And I think turnaround time is utmost important. Would you entertain a property in the heart of Vernon that has 4 PIDs, 1 house? I'd have to look at it, because you have to remember we're also 100% insured and insurable. So, I mean, while I say we can do wild and crazy things, obviously the insurers have to agree with that as well. So thank you.
That's super unique. Thanks, Tiffany. Really appreciate it. And yeah, look forward to hearing from you soon.
Excellent. And Brad's like, can you get back to me on that? Yes, send me the information so that I can review it in its detail. It's one thing to say that I'll do that, but it just really depends on the entire deal itself, right? So yes, shoot me an email once Pete's got my information out, and let's take a look.
Thanks
again, everybody. Happy Easter. Have a great long weekend. Again, I appreciate your time. Deb, have a good time while you're away.
Oh, I will. Thank you.
You deserve it. Thanks again, guys. I appreciate it.
Thanks, guys. Thanks, Deb.
Bye.